The choice to sell a stock can be difficult. Do you sell it now that the price has increased in order to make money? Do you sell it because it has decreased, so you can minimize your losses? Alternatively, perhaps you should sell it given that it has been stagnant while all of your friends are making fortunes with Bitcoin. Fortunately, Warren Buffett, the sage of securities and oracle of Omaha, has us covered on this issue. The greatest investor in the world has spoken on numerous occasions about the art of selling. You'll discover 3 real-world scenarios in this video where it makes sense to sell your stock market investments in a Warren Buffett-like manner. By the way, if all you've heard about this subject recently is what Warren Buffett has to say, you're probably doing it wrong. Wall Street Wisdom is here to provide you with the best advice and resources for using the stock market to become financially independent. Let's first talk about why the character in the introduction does his selling incorrectly, before moving on to the 3 circumstances in which you should sell a stock. According to Buffett, one of the crucial aspects of stocks is that the stock is unaware that you own it. Okay, so what should affect your decision to sell a stock if its price has increased, decreased, or is simply trending sideways? When Warren Buffett wants to sell, the first scenario is as follows. In my first 20 years of investing, if not longer, almost every time I made a decision to sell, it was because I had discovered something else that I was ecstatic to acquire. In order to purchase stocks at a price of 2 times earnings, I had to sell my stocks for 3 times earnings. Which means I had to initially lose money to take advantage of an opportunity. This occasionally forces you to make difficult choices. You might have to leave a business that you really like in favor of something even better. If you followed Warren Buffett's more recent advice, this is where you might have erred in your selling. He wouldn't sell his wholly owned companies today, even if he anticipates poor investment returns. It is a little misleading to follow the advice that forever is Warren Buffett's preferred holding period. He no longer holds for eternity. Rather, he prefers to value the close bonds he has been able to form with Berkshire Hathaway's subsidiary managers over a few additional percentage points of return. Although the Berkshire Hathaway Owner's Manual was first distributed to shareholders in a yearly letter in 1983, Buffett's way of thinking predates that year. After an encounter with Dempster Mill Manufacturing in the early 1960s, Buffett's preference for reselling businesses began to change. A town as a whole pretty much despised Buffett for acquiring their largest employer and then slashing costs and jobs to make it profitable for a sale. But if we examine his letter of partnership from 1961, when he also conducted business with less capital, we'll see what Buffett might advise us smaller investors to do, in my opinion. Warren Buffett would also offer to sell a stock in the following circumstances. 2. When a business's economic characteristics change significantly. He also goes to quote on this topic. Unless we become seriously discouraged with the management or feel that the economics of the company have changed significantly, our natural tendency is not to sell things. Let's examine a few historical instances of significant changes that led Warren Buffett to sell. He recently sold his holdings in a few of the major airline corporations in 2020, stating that the world has changed for airlines as a result of the coronavirus. Buffett sold off the Washington Post, one of his most significant investments ever, in 2014. For many years, Buffett argued that the Post didn't have nearly the same competitive advantages as it did after Berkshire acquired it in 1973 because of how the landscape for newspapers had changed. He finally made the decision to let it go. There is also Buffett's investment in the Tesco grocery chain. Buffett doesn't say why, but he had a problem with this company's management, which ultimately led to him selling his stake in the company. This is what Warren Buffett alludes to in his 1997 annual letter to Berkshire Hathaway shareholders when he states, "Selling fine businesses on scary news is usually a bad decision." Last but not least, Buffett and you know that I both support a concentrated portfolio, but there are times when you must also sell or, well, cut back. 3. When one holding becomes excessive. Yes, it's true what they say about not putting all your eggs in one basket, but you don't have to follow it to the letter like most people would have you believe. You can invest more money in a single stock if your portfolio is smaller. Consider that in 1967, when Warren Buffett was overseeing the equivalent of $500 million in today's dollars, he invested 40% of his partnership's funds in American Express. He eventually exceeded this 40% limit rule due to the stock, so he reduced his position to maintain some degree of diversification. By the way, American Express ranks as Warren Buffett's 4th largest investment to date. A stock could care less how much you paid for it. If I didn't already own the stock, would I still want to invest in it now? Is a good question to ask. If not, you should probably consider selling. Although they are not exactly the same, wanting to keep a stock and wanting to buy more of it are related. They are not equivalent because selling a stock to purchase another item entails paying taxes on your profits and additional transaction fees. As a result, there is a small space between the sell and buy more zones. In the investing world of today, this could be referred to as the do-nothing zone. If you find a better investment, if a fundamental factor has changed, or if a single holding grows too large, sell the stock. You now understand how to sell. This pretty much wraps up Warren Buffett insights and psychology about when to exit and sell in the stock market. Hope you enjoyed. Leave a like and subscribe for more content like this to show on your feed. Thanks, guys, and I hope to see you soon.